Welcome to Trading Lounge and the Bitcoin report for Friday, April 22, and it still appears that the Bitcoin market or the crypto market is following the equity markets, and the equity markets have turned bearish with the Nasdaq making new lows. So I would just imagine that Bitcoin would go with it. So this count here would be sort of priority now, I would imagine. We can still kind of consider it a triangle pattern, but I think that we really need to go with this particular pattern with an A wave, a B wave, and 1, 2, 3, 4, 5 down here for a C wave, keeping it kind of simple at that point. So we're sitting at the 40,000, which is significant. Let's go in and take a closer look at this. So this is where we were in the bearish count. We were looking for the A wave and ABC for the B wave, and then down for 1 and back for 2 over here. Don't need that. Might just put in a trend line there. I mean, trend lines are kind of, they're okay until they're not. Seems to cut in nicely there, so it seems to be seems to feel right, if that's any good. That can kind of help us out here a little bit. I mean, the other point too, just to be here, there should be some sort of correlation between the length of this structure and this structure here, just to give you the thing. So that means that we may be sort of, I might be looking at this wrong here. I might need to be looking at this in terms of this wave 1 here for this. So opens up another can of worms, so to speak. I'll just give that some thought. Might not be the case, and you know, so that could take us down to just thinking this out here a little bit. Just bear with me a tick. 3, 4, 5 here, then a corrective move, and then down for 3, 4, and 5, something like that. I know it's crazy, isn't it? But well, that's going to upset Bitcoiners for sure, isn't it? Anyway, we'll keep working with that. It's always one step at a time. But like I said, this has either got to really be the triangle pattern, or it's got to be this bearish pattern. So the triangle pattern, if we can look at that for a moment, is this one here, which is one, and we've got 2 triangle patterns, but it doesn't matter. But I think that one of the things that you could really consider is that once and if this low here is breached, then you know that all hope is lost. Sorry, I'm just sorry for the silence, you know. I was just thinking it out, you know. It is analysis rather than entertainment, but we'll try to blend the two a little bit. Yeah, so that. So we've been working on the 4-hour chart, so I'll just go to that for the bearish count. But I also have changed it as well, and the reason I've changed it is because this particular pattern here on April the 12th was really, some of the big tech stocks like Amazon had this as a low, and we've got them as the A wave, the B wave, and the C wave. And this B wave here has sort of through a lot of the US equities and the S&P 500 and so on, they all got this date here, the 12th and 13th of April, depending where you are on the planet. That's significant for. You just need to look at Amazon and take it from that point there, and you'll see it in Google and and a few others as well. So that's what I'm going to do. So as I pointed out, the bearish pattern would be validated if this low moved out here. But I had a bit of a look at this here, and I'll show you how I've looked at that. But I've counted that down as 5 waves, the same as pretty much the S&P 500. So I'm going to put that wave 1 sitting in here for that, and that means that we'd pull back for wave 2 at that point. So that means that we can lift this up to this point here to go short, or to hedge any of your BTC as such. But I think also too, we should also look at just getting in a little bit earlier than that. So this move up here should be an ABC pattern, so we should be able to tackle the problem at that point, and we're expecting the S&P to go back into that space there as well. So from yesterday when we looked at this, we just cut straight through to the 20 tick chart to look at this. So I'm not going to be focusing on this. I'm just going to be focusing on this move down here and the corrective rally, or the bounce, if you will, off the 40 here. So we need to extend this across to over here because we need to take that short at that point. So I'm just going to go to 20 ticks, which is reasonably fine in terms of details, and I'll just go to here. I won't go into all that over here. I just want to focus on this here. So I've got wave 1 here, and I've pulled all this apart, and it's the best fit to have it at that point. And then I've got a nice sweeping wave 1 and 2 to here, and then I'm looking at all of this as wave 3 and 4 and 5 for the 3rd wave here, and the 4th and the 5th. So I think that we're done on that point. Now the thing is that the textbook would have us going back to the 61.8%, but it's not always the case, and sometimes it hits it just perfectly, and it's sort of like, well, that's pretty haunting. But anything could happen. So we could even, I mean, first of all, we'd be looking for, let's just get some, I know I'm pretty close to using up all my objects on the chart, so there we go on that one. So I'm going to remove this, and that was our target area up there, so we kind of got close to that on that note. So that's a bit of stuff there that we don't need. I'll leave the 41 in because that's going to be important there. And see, the thing is that we can look at this here as the A wave here. I'm just going to be very conservative because I can see that that's 5 waves here. I could look at this being the B wave here as the A wave, B wave and C wave, and then having 5 waves up here for that. So we may not get all the way up there for that. So as you know, we want to be short under here. And you can use this as a, when it comes back down here again, it'll be a classic trading levels pattern. So it will come through it, you'll have that low and you have the second low, so you can just go on to the second low. This is 1, 2, 3, 4, 5. So we'll probably see, it could be the 5th wave there, but anyway, we could see there's normally some sort of equality in terms of distance between these sorts of things. So we could work with that. That didn't play out very well, because I don't want to be shorting in the 61.8% mark if it doesn't get there, you know. This would be the other side to it here, so just up to 41 at that point. Yeah, so we may not get up there, you know. And it could get quite messy over the weekend as well, because it'll be waiting to see what the equities does, you know. And then Monday. see if I just bring up, this is just one chart here. So I've counted, this is the S&P 500, sorry. And we're down here, so we're looking, I think there could be even another little move here. So we're looking for the ABC pattern over here and then down for that. So it hasn't really started, so keep an eye on that. This will also need to sort of wait for stock as well. So don't forget, this is not bearish until until it takes this low out over here. But I think from where we are at the moment, we could take this here on as that bearish thing, you know. But what I'm trying to do here is sort of because we've got 5 waves here. Let me just double check on this. Or we could look at that as a B wave, a bit of a long shot, possible. So we'll have to wait for that there, but we could move. Let's just say, for instance, that this moves up here, right? If that moves up there, then you can move that to that point. But it needs to take that top out there first. Then you can move that to that point. You could also, if it moves up here further, you could also start to look at it like this as well. Take that low and this one here. And then, you know, the crossing over of this. Let me just remove a few more objects over here so I can chat about this a little bit further. So when you've got a trend line like this, it's a bit like the trading level. So this is very simplistic here, where the market comes down and bounces, goes through it here rather, and goes back, and we start working the short trade up from the low here. If you know the count though, you could sell up here if you wanted to. You know, there's lots of things to do. Also too, this is trading levels pattern 2, classic trading levels pattern 2. So the most common pattern is it comes back above the level here, so then you need to rework it as well, but start from the low and the second low. So we just talked about that here. So that would be the low here, and that would be the second low in this case. So I wouldn't chase the market going through here. I'll wait for the retest. And if it goes back above the level, well, then you saved your ass, you know. And then of course, the other pattern here will take you back above the level. So this will be this one here. So when it comes through here, it gives you that, but goes back above and then comes back down. So then you've got to start it again. But inside this little pattern here becomes interesting because it's a fractal of this larger pattern here. So when you come down here, it will be the arrival, the reaction. So it'll be the arrival, the reaction, and then the first low below the level, so into here for this, and then so yeah, it's just the same as this. So what I wanted to talk to that about, let's just assume for a moment that this is not valid unless this line's not valid unless that top's taken out. Okay, so when we do get up here for this and the market decides to come down here, it will be getting through to the other. You need to get through to the other side, you know, and what you need is you don't take the breakout here, you wait for the retest here, and then you have the short trade at that point. And then if that's breached at that point, you know that it's retested that line and it's, you know, doesn't need it anymore. And sometimes you've got to be a bit careful. You can be triggered in on the short side and then you'll suddenly get another retest and down again. So what you need to do if you do get triggered into here, don't put your stop too close. Allow that to play out here. It doesn't happen a lot, you know, I'll say 20% of the time, but you know, it could be 10 or 15. It doesn't matter what percentage it is. It could be 99%, but it's still that 1%. Do you know what I mean? So be prepared for that though. But it does seem we've got like an impulse wave in this play here. So this almost like a triangle, could probably put that over there and have an A, B, C, D and E here, but it doesn't really matter. We're still, the S&P 500 hasn't moved up yet. Do you know what I mean? So that's really what we're looking at this point. So we'll just leave that. Yeah, there's that. But pretty confident that we're going to be going down. I'll let you work on it from that point. So also with Ethereum as well, we've got a bearish count and a bullish count for Ethereum. Now, Ethereum will probably move up to here and then move down like that. If it moves up to there, then you can get this short trade set up here and push that up to that point, wherever that is. You could short in the box. This could also be counted as 5 waves down here pretty easy. You can count this as wave 1 and 2 and 3 and 4, and then the 5th wave is 1 and 2 and 3 and 4 and 5. But I don't really, I'll just take it to this point because I would look at this as being in the bearish count. I'd be looking at this here as, well, in fact I got that wrong, so yeah, that's the bearish side here. This would be the bearish side here with wave 1 here, and wave 2 already in place. Sorry, I just had to double check that. So in this case, we're not going to see that rally that high. We're only going to see it go back up 50-60% here and then go down. If that's going to be the bit, so I've got this as all the triangle bullish case here, but this would be the bearish case. Just I don't have to change charts then, but wave 1 here, and the A, the B, and the C wave here for that. So if that's breached, you know that, and when that pushes up there, then move that over to that point. Okay, so I'll just leave it in the middle there. Yeah, so that's that. So if that's breached, yeah, and it's probably highly likely. I mean, because this has come down here and it's bouncing along, just like it normally does, and come through at that point. But anyway, we have to wait for the evidence, and the evidence is that we need that low taken out, or that low if we get the rally at that point, and then we're on the bearish side. Alrighty, I'm going to leave it at that. Thanks for tuning in. Enjoy the weekend. Cheers.